Good afternoon, and thank you for joining me for another office hours training. I am Crystal L. Gunn, your financial strategist and small business advisor. And part of my job as that advisor, or that strategist rather, is be it on the personal side or the business side, is to help you heal and redefine your personal financial relationship. And on the business side, to help you build a strong business foundation on which you can grow, right? I also strive to bring thoughts, products, services, conversations to you to get you to think next level, to bring to your attention things that you may not be considering, to bring things to your attention that you just don't know about in an effort to build that financial relationship or business base to the level of which you ultimately desire it to be, right? Again, I also make you have some aha moments, some breakthroughs, because that's where you start to shift. That's where the magic happens on the personal side or on the business side. This month is Life Insurance Awareness Month. And I started talking about life insurance every day last month in August and dedicated it to life insurance because it's so very important and it is a great tool, right? So for the first 2 weeks of August, I spoke about misconceptions of life insurance, and there are a lot of them. So go back and watch those episodes and see what misconceptions you had about life insurance, right? And so that you can clear those misconceptions out of your mind so that you can really use this powerful tool. The rest of August was all about reasons to have and ways to use life insurance, and continuing with that this month again, because it is Life Insurance Awareness Month. So let's look at reason number 12 for having life insurance or using life insurance: for funding trust accounts. And so life insurance can fund a trust, providing long-term financial support for your beneficiaries. This ensures that your wealth is managed and distributed according to your wishes, benefiting future generations, right? So let's just get into some of those examples, and then I will also just add some conversations that I've had with other clients about that and how we were able to set something up or are in the process of setting something up for them. So the number one reason is providing for minor children. So you establish a trust for your minor children and name the trust as a beneficiary of that life insurance policy. Upon your passing, the death benefit is paid directly to the trust, which is then managed by a trustee until the children reach a certain age or milestone, right? And so I'm not a fan of leaving children a lump sum of money, right? And you've heard me say before, if you watch me, I had one client whose daughter is 24, and she said, yeah, you leave me $500,000, I'm balling out. Well, you don't want that to happen. You want to make sure that that child has money to last, right? And so this particular client, her daughter graduated earlier this year from college, and now has her first real job post college graduation, right? And again, are you just going to leave this money for this child? Because she's technically still a child, right? What does your death do to her financial situation? Well, it turns it upside down. But you also don't want to leave that lump sum because you want to make sure that that money lasts, however much money it is, right? And so this ensures that your children's financial needs are taken care of while the funds are protected and responsibly managed until they mature enough to handle the inheritance themselves, right? Um, the other thing, a lot of times, and I had another client who 3 kids, 4 kids, and I said, "Well, who will take care of your children if something happens to you?" And she says, "Oh, my sister will." Okay, that's fine. You need to set up a trust. No, but my sister's going to take care of the kids. You don't know what your sister's going to do if she gets $1 million in cash. I mean, you know what I mean? In one lump sum. You want to make sure that how you want that money to be distributed to your children, right? You don't want, you know, and also not only how you would distribute that money to your children, but also distributing the money to your sister if your sister's taking care of your children to cover the expenses that come with her taking in those children, right? And so there's so many ways and needs to think about that. Like this particular client owns a house. Now her children are 17 to 23 or whatever. But still you have those two that are still in school. Well, what's going to happen to those? Well, your sister will look after them, but and then I asked, can your children come together and pay this mortgage payment right now that you have on this property? So doesn't it make sense to pay that off? So putting this money in a trust, then she has a grandbaby as well to make sure that it's not just spent frivolously, right? But it's used to see them through life. Okay, does any of them want to go to college? Well, let's make sure we put some money aside. Is any of them starting a business? Well, let's make sure there's money in that trust to be able to feed that business that they want to do, whatever it is, as opposed to giving a lump sum. Plus, here's the other thing. I've seen tons of times that people will put their underage children as a beneficiary. Well, your kid can't get that money. The court's going to assign it to a guardian, right? And it might not be the guardian that you want, and it might not do what you want them to do and how that money is to be taken care of. So that trust account becomes really, really, really imperative when you're providing for minor children. The second reason is supporting special need family members, right? So if you have a family member with special needs who require lifelong care, you can set up that special needs trust and fund it with the life insurance policy. This ensures that the family member continues to receive financial support without jeopardizing the eligibility for government assistance programs such as Medicaid or supplemental security income, right? And again, you have to think that process through. It might be a child or family member who needs very specific 24-hour care, right? Then that you might have another one who doesn't need 24-hour care, is self-sustaining, but will never, because of whatever their mental capacity might be, they will never earn a really, really good income. So you want to make sure that whichever situation, one end of the spectrum and everything in the middle, that the money is put into a trust so that you get to determine how that money is doled out, how that person is taken care of after you're gone. This is really, really, really important. I had a conversation with someone who really, like her oldest daughter, because there's like 10 or 11 years between the special needs child and the oldest daughter, and said that, well, my oldest daughter stays around and, still lives with me to help me take care of the youngest daughter. And I said, and that's great. I said, but you also want her to be able to live. And so you want to make sure that she has sufficient revenue in order to be able to do that. Money left aside, which makes it easier. It's great that she wants to do that, but you don't want her life to be held back because she's taking care of her sibling. Yes, she's going to take care of her sibling, but do we need the money in order to bring other people in to make sure that this special needs child is absolutely taken care of and has the best opportunity available, in the best life available? And not to mention, what if something happens to the other sibling that will take care of her? We need to think about those things. It's horrible and it's hard to think about them, but we do have to think about them and put plans in place so that those individuals are taken care of. So supporting special needs family members. Life insurance allows you to do that, provide long-term care for the loved one with the special needs while ensuring that the trust is structured the way you want it structured to protect their access to essential public benefits while being able to live a fruitful and fulfilling life, right? Without any financial strain. Number three, ensuring continuity of family owned businesses. You can use a life insurance policy to fund a trust designed to support the continuity and operation of a family owned business. This life insurance payout goes to the trust and can be used to cover operational costs, buy out business partners, or ensure smooth leadership transition according to your wishes. So it might be just a family, someone else might not work in the business with you. Your spouse might not work in the business with you, or your children might not work in the business in the business with you. But you want that business to continue, and you don't want. Hopefully, you have a buy sale agreement, and we'll talk about that later. But if you want stake still in that business, because you might have a partner, you know what I mean? You still want to make sure that that business benefits your family, or that business just goes on once you are gone, ensuring that your business legacy continues and the family business really remains a valuable asset that contributes to the family's long-term wealth. We talk about that generational wealth, right? Well, making sure that that family business stays intact and can continue even if you are no longer here, passing down that generational wealth. The fourth way, you can create a charitable trust. So you can establish a charitable trust and fund it with insurance. Who's that organization, that one organization that you supported so much? That trust can receive the death benefit and distribute funds to charities or causes you care about over a specific period, creating a lasting impact and aligning with your philanthropic goals. It doesn't have to just be one lump sum. You can do it that way, but it also can be put in a trust to say, okay, well, I want to give $50,000 a year to this organization for, I don't know, this scholarship that is now in the name of your family, right? And so you want to make sure that every year this organization is giving out scholarships in the name of whatever your family name is, and you want it to last for however long you want it to last. Well, putting that money into a trust, as opposed to just giving them one lump sum and expecting that charity or that organization to be able to do what you say. That trust ensures that it happens. And if that organization, closes its doors and shutters its doors, you have information in that trust saying, well, if this organization shutters its doors, then we then can use this other organization, the remaining funds, whatever it is, you get to dictate that, right? And it allows you to leave a meaningful legacy while providing long-term financial support to causes that are important to you, while potentially benefiting from the tax advantages during your lifetime. Number 5, managing wealth for future generations. You set up a dynasty trust funded by life insurance, designed to support multiple generations of your family. Talk about that generational wealth. Well, here is how you get to control it. And that trust allows for the gradual distribution of the funds to ensure that each generation benefits while protecting the principal amount from mismanagement or quick depletion. That's where it's so vital. And in that trust, you can, there's certain things that you can dictate in there. These children, in order to get access to these payments, have to go through financial education courses. They have to do all of this stuff so that they can manage this money and it doesn't end in 1 or 2 generations. I always give the example of the Vanderbilts and the Rockefellers. And I don't care how you feel about the families personally, but one family's wealth is still going on because they taught the children how to continue to do it, where the Vanderbilts, wealth ended after several generations because they did not dictate and teach the children, right, how to continue to build it and how to pass it on to each generation. So you want to ensure that your wealth is preserved and distributed according to your wishes, benefiting not just your immediate heirs, but the future generations, creating that long term financial wealth and financial security. Some more examples on how life insurance can effectively fund trusts to provide ongoing financial support for your beneficiaries, ensuring that your wealth is managed responsibly and in line with your intentions for future generations. And that is the biggest piece, that last part, making sure your wealth, or the wealth that you then create through this life insurance policy, is managed responsibly and in line with your intentions for future generations. Right. And because I know, and I made a point to stress that, because I know some people are saying, well, I don't have any wealth today, but you can pass on wealth through these life insurance policies, but you also want to make sure that money is going in a trust so that it's managed responsibly. So do me a favor. Think about your children. Let's just start there. How old are they? If they're under the age of 22, who will take care of them? Like, who's going to take care of them? And how are they going to take care of them? Like, that's the biggest thing. How are they going to take care of them? So let's say, oh, yeah, your sister would take care of them. You got 3 kids. Like, literally, this just happened. And this wasn't, um, I didn't know the mother. Someone called me um, about the daughter. The mother died. And now the daughter had her 1 or 2 children, but now she also has her younger siblings to take care of as well. As a financial strain, right? And there was no life insurance to help with that. So now this young person has her kid and then her younger siblings as well, like all under the age of 12, right? If your children are over the age of 22, are they prepared to receive half a million or $1 million? How would they manage that? I was talking to someone else, and she has 3 kids, and one of her kids being 22, has all boys, but one of them being 22. And I said, well, what would he do with those other siblings? And she was like, yeah, I don't know that he would just take them on. Now he probably would, but people also know their children. So she was like, I definitely would need money to go into a trust, because I don't know that he would, you know, just take this younger sibling and do, that's like 12 or something, and be, this very responsible person. And here's the other thing, that 22-year-old, if he received a $500,000, you want to make sure that he doesn't go out, buying cars and gym shoes and jewelry and all of that, and run through that money and look up at 32 and not have it. And you see it all of the time with people who win the lottery. They win $30 million, and then in 5 to 7 years, they have no money left over, right? Because they didn't have a plan. They didn't put any, you know what I mean? There was nothing there to help them. And they went and they just spent money, spent money, spent money. Plus, now they're in a different tax bracket, and all of that stuff happens. So how would your kids manage it if they were over 22? And who's going to take care of your children if they're under 18? So let's talk about it, right? Remember, life insurance is a necessity and a great tool. And when I talk about getting your financial house in order, one of the reasons, one of the ways, or one of the items is life insurance. Life insurance is a part of that. It's a really, really, really powerful tool that so many people are missing out on because they won't have the conversation about it. You talk about you love your family. You talk about you love your children. When you talk about building generational wealth, how are you going to do that? But when you talk about it, the love that you have for your family, the least you can do is have that adequate life insurance coverage, not just enough for a funeral, right? So again, we talk about building that generational wealth. Life insurance is one of the tools that you can do so, We talk about breaking generational curses. If the curse is going to stop with you, then the new system of success has to start with you. You have to get the tools in order to create those new systems of success in order to be able to pass down and maintain and keep that generational wealth, right? So, what's my favorite thing for today? It's life insurance. And I keep just giving you more reasons and more reasons as to why it is. And I'm hoping that it's starting to make sense to you. I'm hoping that you're starting to really understand how important life insurance is, and for you today, tomorrow, and the generations that follow. So life insurance is my favorite thing. What do I want you to do? Complete the life insurance calculator to see how much coverage you should have. The link is in the description. It becomes a starting point, right? You might not start with that amount, right? There may be an increasing death benefit policy as opposed to a level death benefit policy, because you can't start with that amount. Whatever it is, the strategy that we build will be specific to you. So schedule that free consultation and let's discuss the options. Let's talk strategy. And then let's fill in the gaps in coverage that you have. Get your children covered, get your spouse covered, get your trusts in process, right? You don't have a whole lot of time. And not necessarily because someone is going to die immediately. We don't know the day, hour, or the time. And I know it's a dreadful conversation to have, but you have to have it sooner than later. And sooner is better than later, always. So give yourself some grace, though. Whatever happened yesterday. Give yourself some grace. Keep striving for your next level. Never, ever, ever give up on you. Invest in you. And this is an investment. Invest in you. I promise you, it's the best investment that you will ever make. And you definitely, definitely will not be sorry that you did. You'll never regret it. Thank you so much for joining me today for another office hours training. Have a fantastic rest of your day, and I will see you next time. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you on the other side.